All right. There we go. Should be live here. Perfect. There we go. We're live. All right. Okay, so quite a lot going on. First things first, let's wait for everyone to join. Awesome. Can you hear me, HL? You hear me loud and clear? Everyone good? Everyone hearing me well? Hey Adele, good morning, good morning. Yeah, it's a little early morning stream, but obviously there's reasons why we're doing it a little bit earlier. But yeah, I just wanted to quickly talk about Bitcoin and Ethereum. So you guys can hear me? Awesome, so let's start. So, yes, so there's quite a few things I want to talk about. Number one, of course, on Bitcoin, you can see that we ended up breaking our wick high. Now, in the Telegram channel last night, I mentioned to you guys, look, right now we were over leveraged from our exponential moving averages, right? So you see this little gap situation right here. I don't like entering trades or holding trades unless the gap is filled. You can see earlier this morning when I woke up, we hit the exponential moving average, and the current price we were trading at was around the 66.1 region. I mentioned that, look, Bitcoin right now is looking to break the wick high. The wick high was at 66.4. You can see that we broke the wick high and we saw a massive squeeze into 68K. The 68K region is important because you can see that from previous price analysis, there's really no resistance in between this zone from 66 to 68. And a perfect example of this you can see is just look how many times we saw these candlestick formations break and then continue pushing into the highs, right? When you have these sort of gap situations on Bitcoin, that's something you want to pay attention to. When you have these large resistance levels and you see a squeeze, it's very important for you guys to start looking for those areas, for those longs, for those continuation trades, or even those wick breaks. Right now on Bitcoin, right, we've already hit that level of 68 and rejected, but you can see that Bitcoin is once again trying to break back into those highs of the wick high. If the wick high is broken, then you simply long into the major resistance of 68.9. Would I enter a long here? No, I would not enter a long here because why? Why would I not enter a long in this sort of situation? Well, number one, the 20 EMA hasn't been tested, right? So the 20 EMA still has not been tested. If we were to see Bitcoin reject and then break below, then I'm caught out on a trade, as well as I'm caught out on a trade near all-time highs. That's not something I want to do. So instead, all I'm going to do right now is just sit patiently and wait for the wick break. I would have my alert somewhere around here. And just as soon as I get the alert that Bitcoin's trading into 67.5, I would start watching the chart. As soon as we see the level starting to push higher, I'd enter a long position. Once I enter the long position, I'm obviously just going to either be aggressive or take my profits on the major resistance. Once the major resistance is hit, then I'm locking in those gains. The reason why I'm not holding my trades is because we're not waiting for hopes and dreams. We don't know if the resistance level is going to break. We don't know what's going to happen at the resistance level. All we know is that we are trading into that zone. A perfect example of this is Ethereum. Now, a few days ago, rather 2 days ago, and yesterday, last night as well, on Telegram, I said, hey, look, our main take profit level is going to be at 26,668. You can see that, yes, Ethereum hit that level perfectly, but what happened was a lot of traders went for a long position on resistance. Do you see what I'm trying to explain to you guys? We had the wick high break right here at 26.55, or even right here when I mentioned the chat, like, look, Ethereum is going to push higher. We are lagging. It is a nice long opportunity. You could have entered the zone of a long here. You could have entered the zone of a long here, but the point was you were supposed to take your profits on resistance. We were not holding the trade for hopes and dreams. We were not holding the trade for the massive squeeze for 3,000, and we're not doing that. All we're doing is just trading into the resistance zones. Once we end up hitting those zones, we lock in our profits, and you can see that Ethereum actually managed to reject that zone with a very strong rejection formation. A lot of traders got wrecked here, right? They ended up holding that trade, saw the continuation, and look where we went, guys. We went all the way down into the 20 exponential moving average in one candlestick. Ethereum went from 26.86 to 25.40 in one 4-hour candlestick. Do you see why I tell you guys to be aggressive with your trade setups? We are not guaranteed for the long term as of right now. We don't know what's going to happen during elections, and the volatility is just going to get worse. you are much better just locking in the gains as it continues to ride up. And the question, of course, comes is, how do I do that? Okay, there's two ways, and I want you guys to pay attention. There's two ways you can do this. Number one, when you are trading into a zone, so you're trading into, let's say, 2668, right, on Ethereum, you want to trade into that zone, you enter a long, let's say here. So now your long position is right here. I'm gonna change the color for education purposes, but let's go with maybe not blue. Okay, white. So your long position is right here, right? So you entered your long position and now you want to ride it into 2668. You know that the wick high, of course, is going to end up breaking, and that's your main take profit. So what you do, you're in your long position and the trade starts to move up. All you're doing here is just putting your stop loss higher as it continues to break up. If the market ends up rejecting like it did, well, you're still being stopped out in profit. And you just continue placing your stop loss higher and higher. If you are watching it, then it's just a matter of literally watching it. Don't leave your computer. Don't leave without a profit, stop loss and profit, anything like that. Trade number two is, of course, the wick high break. So if you see the wick high break, so as soon as the wick high break, you entered at 2653. You knew that if the wick high breaks, your take profit is going to be at 2668. Boom, lock it in. That's it. Very simple. Two trade setups, right? It depends what type of trader you are. If you are an aggressive trader, you can definitely lock in a lot more gains down here. But then the risk factor is that we don't break wick high. But the longs usually end up playing regardless on the EMA breaks. I hope that makes sense to you guys, right? So if we've already tested the EMAs, then the chances of the long continuing to play are a lot higher once the candlestick closes. You can place your trailing stops on the way towards the upside. Number two, if of course you see the break of the wick high here, then you can enter a secondary trade on the break of this zone, right? You just pretty much break, lock in the gains, and you close. Trade has to be closed on resistance. There's no reason to hold the trade. I'll give you guys another example. So look at Solana, right? So Solana this morning, I mentioned we're hitting the 159 target. Same exact trade setup, Our long position could have been into the resistance, into 159, or our long position could have just been right here at 158 to 159. People always say, oh, Pingu, that's kind of small, isn't it? Well, yes, that's the point, is you're scalping, right? You're not trying to play the intraday positions. You're not trying to hold for the swing position. You're just in and out, locking in the gains and continuing for the next trade setup. Now, look, this whole chop position, you're not underwater, right? You guys are not underwater. We locked in our gains at 159. The traders that obviously entered at 159, they're underwater, and they're underwater by a lot. And that's what I'm trying to explain. Now, looking at the position, you can see, okay, hey, the 20 exponential moving average has been tested. We're now currently fighting for the exponential moving average. And look, now Solana is trying to move back up. What can you do? Well, you can enter another long position here, right? You can enter a long position trading into the resistance, or simply wait for the wick break at 159 and then enter a position again. And then what happens? Well, in order for you to know where exactly to exit, you just pay attention to the previous wicks. The next wicks that you can see are here at 161. That is a major resistance on Solana, 161 right there. So that's your next take profit. Once you break that zone, your exit on that position. If 161 breaks, then your next zone is 185. Do you see how simple that chart setup is? It's very easy. Now looking at Solana from a outward trend, so you're zooming out here, you're looking at it like this. Okay, hey, look, Solana is in a consolidation zone. 161 is a major resistance, and 120 is a major support, or even 134, whatever you want to say. So these are your two lines, right? You want to have 161, 134. Now, Solana is in a consolidation like this. It's going sideways, but if you notice, the more times we test a resistance level, the higher chances of it actually breaking. So what would I do in this sort of situation? I would only be looking for long positions. And the reason why I'm only looking for long positions is the chances of us, as of right now, with the EMAs pushing up, the chances of us hitting 161 are a lot higher. And if 161 breaks, the risk to reward is all the way into 185. Versus if I'm shorting on Solana at 159 on resistance, it's very complicated. Why? I'm now shorting on resistance that's been tested multiple times. The EMAs are now pushing towards the upside. We are using them as support. And of course, you don't have the confirmations from the bearish engulfing. We don't see multiple rejections on 161. We've only seen one test on 159 as of right now. Why would I short? And I hope that makes sense to you guys. That's what counter traders do. That's the problem with counter trading. When you're a counter trader and you start trading like that and you're saying, okay, I'm going to short the resistance, the issue is that if Solana were to break into resistance and squeeze, you are getting wrecked for insane amount of profits. You're better off just trading with the trend and continuing with that. So I hope that makes sense to you guys as well. That's 3 examples and 3 trade setups that we did this morning for Bitcoin, Ethereum, and for Solana. Right now is just a time to be long, right? It's a very simple time. Market right now is pushing near all-time highs. You do not want to be a counter trader near all-time highs because the momentum trading that we have right now is extremely bullish. With momentum trading, you can make an insane amount of money. All you really need to do is understand where to be your entry. So if your entry, again, is on the exponential moving average, you have to be aggressive. You enter on that trade as soon as it hits. The first test, so let me show you guys another secret that I haven't shown anything, right? So let me show you guys a quick little secret and a tip. So just pay attention to this. So when you're trading on an exponential moving average, and let's say these are our candlesticks, just for example purposes, right? So now we have a weird gap. Everyone following along? So this is your gap situation. So these are our candlesticks right here, right? So this is our candlestick, and this is our exponential moving average, something like this. Let me draw something better, like that. Okay, sure. So this is the 9, this is the 20, right? Just pay attention if you're confused, it's right here. So the gap situation is very simple trade setup. When the initial candle, the first candle, so initial is the first candle, ends up dropping to the exponential moving average, there will always be a small pullback. Why? Because bots are waiting on that zone for those buying opportunities. You can see an example of this somewhere. I'll show you, I'll show you this example for you guys. So you can see that when you have the initial test on Bitcoin or Ethereum from the highs, the initial test immediately you see right here, for example, at 64.1. The gap and then the continuation, right? So you have this sort of gap situation. The first candle that hits that gap is always going to bounce. It does not, we don't know how big the bounce is. And what I mean by that is the candle will come down, it'll hit the exponential moving average, you'll see buyers come back up, it'll create a wick, and then 2 sort of situations happen. 1, it continues pushing back up. 2, it breaks down the EMAs. But that little test that you get in the beginning is where you can lock in those gains. You enter exactly on the EMAs and you exit on immediately after. That's trade setup number 1. Trade setup number 2 is now you have the EMAs and the gap's been tested. You've got a candle closed. So candles closed above the EMAs. Trade number 2 would just simply be, okay, wicks, candle close, EMAs are above, enter the long on the break. The reason why we do that is because we don't need to trade this chop. This chop situation that happens here, we don't trade it, right? We simply ignore it. Because think about it. Last night, if we entered a long position on 66.5 and the market was at 66.3, right? But we didn't test the EMAs, what's going to happen? Okay, market has not tested the exponential moving averages. The likelihood of us testing those EMAs first is a lot higher than the continuation of the trade versus not happening here, right? So what that means is, if the market structure were to end up here and there's a gap and we don't know that EMAs have been tested, we probably get wrecked. And that's exactly what happened. The market wrecked, right? So all these traders that entered along here on the 66.5, they got wrecked on this candle here at 64.7. But then the traders that were patient on 64.7 saw the retest, saw the close, entered along, they got all these gains right here. And now, same sort of situation. Am I going long here? No, once again, right? We don't know if the market structure is going to continue pushing higher. We don't know. We don't know because the 20 EMA has not been tested. All we're going to do now is simply wait and just see whether or not we break above. So during times of waiting periods, what do? Well, simply put, I look at other altcoins and I'm like, okay, where would I be looking for altcoins? Now, I want to give you guys an example of Doge, okay? This is important. This is a very valuable lesson you're going to use for the rest of your life, so just pay attention here. On Doge, there was 2 setups. I made a video yesterday about it, but there was 2 setups, right? The first setup was the exponential moving average bounce and the wick high break, whatever. The wick high break was on this W formation right here. So that was your first breakout trade. If you notice, I mentioned in that setup that pay attention to wick highs. Look where the market bounced. Do you see that? That wick, like these wicks at 0.119? The market hit the resistance perfectly. I mentioned that if 0.119 breaks, then 0.124 plays out. But there is profit taking that happens during wicks. So you can see that as a trade setup. And again, there was so many trades that happened this morning, but if you were paying attention, you could have entered a long on Doge at 0.115. For those whales that are in the whale chat, you guys did this. And I know a lot of you did. The 0.115 broke, and you guys entered the long into the 0.119. A lot of you guys made profits. And that's why I tell you guys, pay attention to the wicks, because the wicks happen across the board. When Bitcoin and Ethereum are rallying and you see some sort of altcoins, and I'm not talking about like shit coins, meme coins, or even like low tier cap coins. I'm talking about major altcoins. When major altcoins start lagging like Doge and you see W formations like this, as well as you see the EMA switch around and retesting as support, and of course the daily structure, like that's 5 reasons why Doge was going to hit 0.119. The retest on 0.119 happened, but we don't know if it's going to break. We weren't sure. We don't know that. No one knows that. We're not future tellers. We're not hand readers. We don't know if that level structure was going to break. And you can see it didn't. But what we did know was this level was going to be tested. So we entered the long trading into that zone, and we locked in our profits into that zone. Now the question, of course, becomes, what happens to Doge? Well, if Doge just goes sideways like this, right? So sideways like this, but then it comes back up. And now you're retesting 0.119, which has already been tested twice. This would be the third test opportunity. That would be the break structure. And where does the break lead to? The major zone where it started from, 0.124. People are going to call you and say, oh, how did you know that? Pingu, how did you? Guys, very simple trades. Simple price action move. You lock in the initial. You don't know the chop. You don't know the resistance. You wait for the market to catch up. Then you enter again on the secondary long. Do you understand what I'm saying? Does that make sense for everyone? Does that make sense for everyone? Shane, it is not always going to bounce. I was just giving you a trade setup, right? So on the first test, the initial test on the exponential moving average, it is a trade setup for you. So if something like this, and you see the candles over leveraged, when you have a bounce, the first test, you can enter along aggressively. But you have to be immediately exiting that position, right? Because you don't know if the candlestick's going to break or not. But what you do know is that the initial test, the first test on the 4 hour, usually you see a small bounce. So yes, I hope that makes sense. When we break all-time high, how do we scalp? Because there's no resistance and support lines. Adele, I've talked about this in the live stream yesterday, but when we break all-time high, there is no levels, right? So Adele has a good point. Like, look, right now we're using the levels from previous bull runs. What happens when we break all-time high? Well, when we break all-time high, we start paying attention to our lower time frames, as in the hourly. The hourly will give us the information we need, and then we set up our intraday positions. Maybe a week or 2 weeks of chop. We might see a week or 2 weeks after all-time high of just and then the continuation. We might see something like that. But this sort of consolidation that happens, that's where we start drawing our levels. But the point is, yes, Adele's right. What happens when there's no support or resistance? Guys, when you break all-time high, there is no such thing as shorting. There is no such thing as shorting. You are a bull. You will be a bull. The whole year, you will only be long. You will only be looking for longs. And I gave this example to you guys last time. I lost the most money in 2021 for the bull run because I shorted near all-time high. That is where I lost a lot of my money. You are much better off trading with the trend, because if we break all-time high, we may never come back until the next 2 or 3 years, like you saw after COVID. Then we came back previously 2 years ago. We might see something like this. And this is just a line. I'm not drawing like, oh my God, we're going to hit 100K and bounce. No, this is simply a line. We might not come back to your entry down here for your short position until a few years later. Do you understand what I'm saying? So that's why it's important to just be with the trend. Trade with the trend. Once you trade with the trend, it's a lot easier to obviously get what you're looking for in terms of the long term. Because when these articles start coming out, Bitcoin breaking all-time high, this is happening, that's happening, Bitcoin's doing this, Bitcoin, people and retail are going to be like, oh shit, gotta buy that Bitcoin. And they're going to buy. And the pressure that's going to come from those buys, it doesn't make sense to be a short. Now, yes, there are times when Bitcoin is so overbought that you see a 1 4-hour candlestick and a $10,000 nuke. Yes, that happens. But guess what? That is why for the past year, I've been explaining and telling you, be aggressive. Why? because I was setting you guys up for what's about to come. Now, a lot of you know how this trading style works. You guys are insanely making good money, and that's why, is because of the fact that we're not holding on to trades. We don't care for swings. We don't care for long-term gains. We would rather just scalp all the way through the bull run. And again, we're not scalping for $30, $40. So for those of you listening, that's not what we're doing. We're scalping intraday positions. Intraday positions on Bitcoin are a few $100. On Ethereum, it's a few like 10, 20, $30. It's a good trade setup, and it works extremely well. On the 4 hours, you are busy with life. I'm busy with life. I don't got time all day to sit here and 1 hour charts. No, every 4 hours, all I have to do is look at the charts. What's going on? Oh, nothing's happening? Okay, cool. There's no messages, right? And that's the way everything's built in the Telegram. I don't message you guys unless there's something important. Otherwise, I'm not going to bother you because I'm not wasting your time, right? I don't like my time being wasted, so why would I want to waste yours? So it's the same thing. Same exact setup. So right now, on Bitcoin and Ethereum, that's our trade setups. You can see Bitcoin and Ethereum are starting to rally again. But what would I do in this sort of situation? Do we have any confirmations, right? As of right now, no, we don't. We don't have any sort of confirmations, but we're just going to play a patience game here. If you want to scalp long on Bitcoin, right, you're looking at this, you're saying, oh man, this looks good. Take some long scalps aggressively, right? You are right now, we are above the 9 EMA. Yes, the trade setup is there, but the 20 EMA hasn't been tested yet. But look at Ethereum. The 20 has been tested. This trade setup is a lot easier. Enter along on Ethereum, ride the wave towards the upside, and again, aggressively ride the wave, right? I mean, it's just as it's moving up, you're moving your stop loss up. But when does the time come for the actual trade is when the wick high breaks, you enter the secondary trade and ride the secondary wave to the upside. Very simple trading. So yes, I hope that makes sense for you guys. And once again, guys, like we're on 21 minutes, but just a quick detail for Blowfin, because I know a lot of you guys were asking. So for Blowfin, I pretty much negotiated us 10%. And what that means is, at first they were like, no, but 10% means even if you're not a whale or you're not someone that has a lot of money, you still get 10% cashbacks. Every single person in the Telegram channel as of right now gets 10% cashback on Blowfin. So in regards to fees, that puts you at quite a big advantage than other exchanges. So yes, please sign up for Blowfin because you guys have that 10% locked in, and that's it. That is the end of my stream. I know it's been a little early morning, but yes, please guys, be aggressive, be smart, and if you are a whale with over 5K in deposit, shoot me a message because whale chat is extremely fun, and I will release something for those of you that don't have a lot of money. There is a mentorship coming. It's free. The mentorship is free, but it is being built. I just need some time to work on it. But once it's done, then everyone's going to be happy and then we all succeed together. But as of right now, again, sign up for Blowfin. The link is in the bio. If you are a whale with 5K or more, shoot me a DM. And if you are not a whale, sign up regardless because all the mentorship and education will be posted on Blowfin. And that is all for me. I hope you guys learned something today, and I hope you guys are making some insane money because there's a lot more that we're going to make in the future. And yeah, all right. Have a great day. Yes, Shane, exactly what I mean. Okay. All right. Have a good day, guys, and peace out.